everyone, and welcome to the Thursday night edition of Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today, the editor-in-chief of InsiderFinancial.com. In this video, we will recap today's market action and discuss our trading plan for tomorrow. But first, if you want our free reports, click the link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com with your email. After you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get all of our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1 plus area code and number. Never begin the format with 0. It will not work. And in the welcome email, you will get a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging services are all free services from InsiderFinancial.com. We do not run any paid subscription service whatsoever, no Discord rooms or Telegram chat rooms. First up, an update on last Friday's low float NASDAQ biotech penny stock. The stock had a low last Friday of 97 cents and yesterday hit $1.49 for potential gains of just over 50%. Congrats to all subscribers who banked. We have a few stocks on our radar but are not pulling the trigger in these market conditions. We are not in the same market as last week. Again, we do scan the markets every morning, and if we see anything, we will send out a full report. Again, guys, it's completely free. Check us out. Unsubscribe at any time. So what's going on in the markets? Well, we had on Tuesday Fed Chair Jay Powell's talk with David Rubenstein. As you can see here from the, let's go over to the 15-minute chart. Markets loved it on Tuesday. The initial reaction was they liked what Powell was saying, and then they had time to think about it again when he started talking about inflation, and the market sold off again and then rallied higher. I caught the move with 410 puts. The way I trade with 0 DTE. That means 0 days to expiration options. That's what I prefer to trade. Now, if you're going to trade 0 DTE options, you have to be confident that they will be in the money that day, very, very, very soon. So like today, I bought 410 puts again. Some I bought at 39 cents and some at 25 cents. These options didn't start printing money or running until we broke 411 today. It wasn't until about 12:30 that these options really started running. I sold some above $1, then some more above $2. Again, I'm just trading. I'm not into, we're Armageddon, I'm not, a bear or perma bear or a perma bull. I just traded with the market conditions. And there's a couple of reasons why I've been bearish this week, just the price action in general. And, while the market opened higher today, you can see here, this is the open here at 9:30. You got an immediate red candle, and then it was just selling throughout the day. And there was a couple of reasons for this. The main reason the market sold off and why I thought the market was going lower today, the inversion of the yield curve revisited its widest point since 1981 this morning, as the spread between the U.S. 10-year Treasury yield and the U.S. 2-year Treasury yield reached a gap of more than 80 basis points. The separation between the two instruments touched negative 85 basis points at one point. This came as the 10-year dipped 5 basis points to 3.58%, and the 2-year slid 2 basis points to 4.43%. So what this means is that yields are higher on shorter duration bonds. This means the markets are paying a premium for money today. A long period of yield curve inversion is seen as a predictor for recessions. In the past, this was seen in 2006, 2007, when the yield curve inverted for an extended period of time and foreshadowed the Great Recession of 2008 to 2009. Looking further back, a similar scenario played played out in 2000 when a yield curve inversion presaged the 2001 to 2003 market meltdown and economic downturn. Deutsche Bank noted that not only have the 210s inverted, which acts as a recession indicator, but also the 3 months 10s inverted along the Fed forward spread. Stock investors have been overly optimistic about a Fed pivot since the latter part of 2022. Deutsche Bank is saying it is increasingly unlikely that these expectations will be met, arguing that inflationary pressures are once again on the rise and core inflation remains robust, and certain items such as used cars are becoming more expensive. In light of these developments, it is our belief that the stock market will continue to exhibit volatility and trend sideways within the range of 3,000 to mid 4,000 points on the S&P 500 index. Financial market participants should prepare for more hawkish comments from both voting and non-voting members of the Fed, as well as the market needs to adjust to a renewed upward trend in interest rates. I agree with this sentiment. I expect the overall market to be range-bound with recession, inflation, and further Fed rate hikes weighing on the market. Tomorrow is options expiration for weekly stock options, and in focus for me will be Tesla. Tesla's stunning run to start 2023 is due to a pause, according to technical analysis from BTIG. This is just what they are saying. In a note to clients on Thursday, Chief Market Technician Jonathan Krinsky said that the stock's over 100% gain from January 6th surprised even some of the most bullish prognosticators and was certainly not foreseen in his charts. However, that surprising run is beginning to test technical indicators and is likely to cool off as he believes the rally has largely run its course. We think the 210 to 225 range represents a very strong area of resistance. This was the prior lows from February, May, and June 2022. So let's go over to the daily chart and see what he's talking about. Do 1 year. And yes, you get a sense here that there is major resistance in this area here. He added that a daily RSI touching 77, the highest level since late 2021, also suggests the automakers stock could be due for a cool off. Even if you are bullish on the name, these levels appear overextended, he concluded. Tesla shares continued their run today despite the word of caution, rising 4.86% in midday trading. The jolt to the upside on Thursday brings the stock's gains thus far in 2023 to about 96%, rebounding sharply from an over 60% drop in 2022. And here you can see options trading for tomorrow. Puts, $200 puts, they closed at 98 cents today. Certainly we'll be watching if we break 200 and get in the 190s. These puts are really going to start printing money. So we'll be watching that. It's again, if the overall market is weak tomorrow, and again, the trend right now is bearish, a lot of people will, we've had bullish weeks, and if you notice, the markets tend to close near the highs. This week it's bearish, so I think we're going to see weakness tomorrow. So again, I could be wrong. This is my opinion only. Take it for what it's worth, and let's see how it plays out. In the world of penny stocks, not much happening. OTC is a dog with fleas. You can ask anyone in GVSI and they will confirm what I'm saying. On the NASDAQ, the big runner of the day was HPCO, HPCO, and its partnership with Snoop Dogg. They put out a press release at 9 a.m. HPCO pre-launches Snoop Dogg brands at the Champs Trade Show in Las Vegas, February 8th to 11th, exhibiting with Death Row Vapes in booth 1201. I saw the news at 9 a.m. It would be a good day trade, but it will come back down. I didn't send out a report. I didn't discuss it because, again, I know a lot of our subscribers are not day traders. They're looking for multi-day runners. And HPCO is certainly not going to be that. Closed at 440. It's already trading 345 in the after hours. Again, This is a diluting pig. It's just been again, you can see what I'm talking about. And, they'll get a PR and it'll spike and just move on, guys. MANU, this is Manchester United. Nice day today, up 8.7%. Guys, this company, this football team, it's going to be sold. The richest man in England, he's lining up Goldman Sachs for Goldman Sachs and JP Morgan is hired by billionaire Jim Ratcliffe to advise on a Manchester United bid. You have the Qataris saying money is no object. They are going to bid for Man U. It's one of the most storied teams in the world. Expect a lot of bidders, and again, I expect when the bids happen, it's going to be a much higher share price. Again, my opinion only. Overall names I talked about in my last video, guys. I only done two this week. The weekend video on Sunday night, then the Monday night, and since then there has not been a lot to talk about. Some names from last video: QBTS week, APRN again. Round trip ran all the way to over $1.50. We're back down at $1.08. I talked about options. The reason I like options is just it gives you defined risk. You want to invest $50, $100, you can, and if you get that exponential move, you get it. The problem with trading options on these penny stocks is it's for 100 shares. Moves $1. It represents $100. 100 shares, that's just $100. Remember, for an options contract, each contract is for 100 shares. So, you're buying 100 shares of Tesla, Chipotle, SPY. When they move 4 or 5 points, that's why options, can make you so much money. So, again, that's why, I like trading options, especially when it comes to, the big cap names. You put up a lot less money and you can make a lot more on a percentage basis. AI names, SOUN, nice chart here, been still making a series of higher lows. BBAI had a nice spike. This has been running from $2 to almost $7, getting some profit taking here. Same with AI, just been an incredible run this year and getting some profit taking. In terms of meme stocks, just overall weakness. Carvana, CVNA, last week hit $20. This week we're almost going to touch $10. Silvergate, SI, these are all meme stocks and big, heavy short interest plays. The shorts are winning the battle this week. I think a lot of it has to do with Bed Bath & Beyond. This disappointed a lot of people, There's new financing. It did lower near-term bankruptcy risk, but it's just diluting existing shareholders. AMC, APE, GME, ARC weak. Again, we'll be watching the overall market, more weakness tomorrow. Again, we're going to see, puts printing money. So again, that is the focus for me tomorrow. Again, it's just overall a lackluster week in the markets if you own stocks. So again, if you do own stocks, one way, buying puts, it's just supplements can make you some money while, holding on to your core position. So again, there's a lot of strategies, going to be talking more about, different strategies on the channel, and also we talk about a lot of this stuff in the ebook. So click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com and you get the free ebook and you get our free reports. Well, guys, finally, and just lastly, Insider Financial and myself are not investment advisors. This video does not provide investment advice. Always do your own research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinions meant for informational, educational purposes only and does not provide investment advice. Thanks for watching. Also, remember to smash that like button and hit the notification bell to be notified when a new video is uploaded. Good luck, guys. Bye-bye.